Hi everyone, welcome back to our channel. Adi here. So today we are going to see what is the difference between your ETF and index fund. So most of you must have bought or traded ETFs and index fund, but do you really know what's the difference? So in today's video I'm going to tell you about what is the major difference between these two and which one is better return and which one you should prefer over the other one. So we'll discuss in today's video. So let's the video get started. Okay, so let's first understand what is ETF and what is index fund. So let's say ETF. So basically ETFs is your exchange traded funds. So it is like your buy and sell of shares. So it's basically your ETFs will follow one of the index, let's say Nifty index or BSE Sensex index, whatever the index they want to follow. So that ETF consists of those shares and those ETFs it will follow. But if you see in index fund, it will just replicate the index. It will just replicate whatever, let's say Nifty 50 or Nifty your mid cap or small cap. It will just try to emulate that index. So next difference is if you see ETFs, let's say it's following your Nifty 50. That means all the 50 shares, whatever the weightage in the Nifty 50 of the shares, it will be same in your ETFs. So basically it's just the replica of your Nifty 50 index. So also ETFs will invest in your money market instrument for liquidity. Okay. But if you see index fund, first of all they don't have their liquidity of their own. Okay, so generally they invest more in liquid securities. So that's why you must have heard about tracking error. So that's why index fund having tracking error, and that impacts your return also. So if you see in ETF case, the return is generally, you can predict it. It's generally almost same as your index. Whatever index, let's say Nifty 50 index, whatever the return, ETF will give you the exact same returns. Okay, but in case of index fund, just because of the due to the your tracking error, it impact your return. So if the tracking error is more, then your return will be less. So let's say if your index giving 15%, if there is a tracking error of let's say 0.5%, then you will get 16.5%. Though your index, let's say Nifty 50 index is giving 17% return, but in case of ETF it will be same. So there will be no tracking error. So these are the major things. So next we can check. Okay, the another thing is ETFs you can buy or sell it is in your during trading day. Anytime during the trading time you can do it. So it's basically like your share. So let's say if you it will be more beneficial than your index fund, because let's say in the day the ETFs goes down at let's say during the afternoon, so you can directly buy, because it goes down. But index fund you cannot buy like that. It has to be your day end. So once the NAV, your net asset value, that price is set, then on that price you have to buy after the day end, your trading day end. So that in that case ETFs are more beneficial for you. Let's say ETFs is down, though you can directly buy. But index fund, it's once the NAV is set, that will be the day end value. Depending on that you have to buy. So ETFs you can just buy like your stocks, general stocks and all. So next, so for ETFs, okay, it's you need a demat account. Okay, because you have to trade it like your stocks. So for stocks you need demat account. Similarly for ETFs you need a mandatory to have a demat account. But let's say mutual fund, it is not compulsory to have your demat account. You can do it through offline, but it is beneficial to have your demat account and keep your mutual fund in your online mode in your demat account. Okay, so the next one is you have to buy minimum 1 unit in ETFs. Okay, so just like your stocks in Indian market, you have to buy 1 unit, minimum 1 unit. But in mutual fund, you can buy, it depends on your minimum amount, not your minimum unit. So how much minimum amount you want to invest, let's say through SIP or your lump sum. So depending on that, the unit will be allocated. It may be less than 1 unit, 0.5 or 0.75, but in case of ETFs, it's mandatory to have 1 unit. So the next, there is no recurring charge, and your expense ratio is very much low, you can say at lowest side. Okay, but in case of index fund, you can see there are lots of charge. First of all, your expense ratio is way much higher than your ETFs, and there is a exit load. If you redeem it before let's say your exit load time, then you have to pay that fees, 1%, 0.5%. so that thing you have to pay. And there is you can see the recurring charges I mentioned. In ETF there is no recurring charges. Here index fund, even if you don't do any let's say investment or any trade, you have to give the expense ratio, so that you can say as a recurring charge, and the expense ratio is much higher than your ETFs. So obviously ETFs are a bit riskier than index fund, but the growth is, your return will be better than in your index fund. So if you are investing in your ETF, because it's more on your stocks, so if you are investing on the ETFs, then it will be give you better return. But in case of index fund, obviously it is safer than your ETFs, but your return will be bit lower side because of the tracking error and expense ratio and your exit load, all those things. It's less than your ETFs. Okay, so these are the major differences between your ETFs and index. So I hope you are clear. So now come to the most important part, taxation. Okay, so let's discuss about ETFs. So taxation, you can see ETFs, which different types of ETFs are there. So the taxation is different for different ETFs. So let's consider index ETF or thematic ETFs. So basically these are equity ETFs. Okay, so for equity ETFs, your long-term capital gain is your like till 1 lakh. If your gain for the year, then it will be no tax. Beyond that is 10%, and your short-term capital gain is 15% if you sold it before 1 year. Okay. Then for gold ETF or debt ETF, or you can say international ETF, all these ETFs, your long-term capital gain will be 20%, and you have the indexation benefit. Okay, but in case of short-term capital gain, so as per your tax slab, so it will be added to your yearly annual income. Then depending on your tax slab, it will be charged. So if you know that, right, in ETFs you get dividend also. So in the case of dividend, if any dividend you get, it will be again depending on your tax slab. So this is how your ETFs are being taxed. So you have to check which ETFs you are buying, and according to that it will be charged. But in index fund, in the long term it will be 10%, but it will be without your benefit of indexation. So ETFs, you can see there is a benefit indexation for gold ETF, international debt ETF, but here index fund there is no benefit of indexation. And obviously for long-term capital gain, if it is within 1 lakh, then you will be no tax. Beyond that it will be 10%. So in short-term capital gain, you can see 15% directly. So it's more like your similar to your equity ETF, you can say index ETF and thematic ETF. So these are how it taxed in case of index fund and ETFs. So I hope you are very much clear in between ETFs and index fund and know which one to invest. And depending on your risk appetite, you can either choose to invest in index mutual fund or ETFs, you can say. So you can go to if you are not sure, then you can go to small case and check. There are lots of ETFs are there. Your Nifty 50, Nippon Nifty Bees, all those Nifty 50 mid cap, all those ETFs are already there. So if you want to invest there, you can buy it using your Demat account. Index fund, you can invest in any of the index fund. There are lots of index fund. So I hope this video is really helpful. So please hit the like button and subscribe to the channel. That will be helpful for me. So thank you everyone.